Raoul, thank you for spending time with me in this suite here, which is cool. And it's a pleasure speaking with you and having.
It's great to see you in Dubai. Finally,
Yeah.
I was supposed to make it last year, didn't make it.
Yeah, it's been a good couple days here. So I wanted to ask you, speaking of this event here, Token 2049. One of the things that, as I've been walking around and listening to the different panels, I've been trying to like sift through the noise for, kind of the key takeaway. What, because, these events are pretty chaotic. There's a lot going on. And I wanted to ask your opinion about like, what's the single trend or the kind of key takeaway that you think so far, like, that you've observed from this event, what people are saying and talking about?
So there's two things at a really top level that are interesting. The size of the crowd, the level of excitement is not normal in financial markets.
Yeah.
We were talking about this on camera before. There are now more brokerage accounts in crypto than there are in traditional markets. And this is not an investment. We run a portfolio. This is people's entire life savings and their future hopes and dreams.
Yeah.
We've never seen anything like this. So the way at which people become kind of cult heroes within that community, people were crying when CZ was on stage.
Yeah.
Right. So this is a movement much bigger than most people understand. People who are in traditional financial markets, they don't get this, but this is a much bigger thing because people have been gifted an asset that goes up 150% a year, including like 3 or 4 70 or 80% drawdowns, yet it changes everybody's lives. The other thing, so that's one thing. The other thing, you sit on any panel and you realize the sheer amount of intellectual capital in this space. It is unlike anything I've seen. Yes, when I was at Goldman, there's some really incredibly smart people.
Sure.
This space is just littered with them, whether they're technologists, finance people, creatives, dreamers, just you name it, they're all there. And that's magic. When you get capital, intellect, and then this community of passionate people, that's what this is about. That's the signal here, is like, people can have opinions about crypto, people can think about stuff, but this is real. And, this is the one in Dubai, and there's 15,000 people at Token 2049. Yeah. Singapore is going to be 25 to 30,000 people.
Yeah, I didn't realize the magnitude of the Singaporean event. I was talking to another gentleman earlier today, and he was telling me that, and I was like, it's just amazing.
So imagine having an, SPX ETF conference, or, how many people
anything in finance, right?
A couple of RIAs looking for clients. I mean, it's just a different world.
Yeah, yeah. Speaking of, I'm going to ask, maybe it's a cliche question, but it's related to what you're talking about. Having been a consumer of your content for quite some time, there's two things that you talk about: the exponential age, actually 3 things, the banana zone, and DTFU. Right?
Yeah.
All right. So this is, I think, very relevant right now. So I want to kind of work through this a little bit. There's been a lot of volatility in crypto assets and particularly technology assets year to date. Yeah. But we're still in this exponential age.
Yep.
Yeah. So what's your take on that volatility, its impact on these 2 key segments? Because for me, equities, when I think about equities these days, I really just think about technology.
Yeah.
I think that's the only place to be in that particular space. And I think about digital assets, right? Yeah. And almost alter egos of the same thing.
Yeah.
So as it relates to kind of your exponential age proposition, what's your take on the current state of crypto and tech in this vol period?
So to explain the exponential age, it's this extreme exponential adoption of these technologies, whether it's AI, whether it's crypto, whether it's EV, whether it's robotics, whether it's space, all of these things. And they are all on a log return. So they're exponential. If you look at price charts. So that is the game we're playing. Those exponential assets, if you think of Amazon stock, back in the early 2000s, it fell 97%, it went up 600%, it fell 50%. You know, they're volatile.
Yeah.
So they're volatile assets, but if you can hold on to them, the returns are truly extraordinary. This is why Jeff Bezos is the richest man in the world, or close to it. And, you know, it's all the same thing. So that is the mega trend. That's the exponential age. Within it, you have the business cycle and the liquidity cycle that drives this. So what you find is you need to understand where you are in that cycle. That cycle is driven by liquidity flows, let's say. And recently we had liquidity tightening from a strong dollar and higher rates in Q4 2024. That has a 12-week lead into assets. So assets fell because liquidity had tightened then. Liquidity has been doing the opposite now. It's been easing massively. And so price should follow. But the volatility is big, right? People don't realize is, you know, you're used to a 10% being a correction in the S&P and anything above 20% is a bear market. 20% is an afternoon in crypto because it's highly volatile. It's a 70 vol asset versus a 15 vol asset. So it's much more volatile. So the idea is you need to be able to understand how to navigate the volatility. So what we call the banana zone, what is that? That's the accelerated point in the cycle where prices go exponential. It's usually at the latter point of the business cycle. And that's the kind of zone we started. We had the big leg up Q4 last year. We've had a corrective period, and then usually we now should go up for the rest of the year in a way that makes it quite hard to even buy, with a couple of sharp corrections en route just to gut check everything.
Yeah. With the unknowns that'll come in through.
So now we've established that we're in this exponential trend that is driven by the business cycle. It's a 4-year cycle driven by the debt refi cycle. We're in the last year of that, which is usually one of the best parts of the entire cycle. It is going to be volatile throughout that period. So then my job is trying to communicate to people, okay, if you've been given the greatest performing asset of all time, then you don't want to screw it up.
Yeah.
And it's hard because most people aren't used to volatility. It becomes emotion. And emotion doesn't help you in this. It'll force you to do the wrong things. So I try and explain to people, you know, firstly, don't use leverage. It always looks great because you see some guy on Twitter who's made 100x returns and he's done it in perps and he's done it. It's like, it's never going to happen. You are going to lose your money. Because rule number one is don't lose control of your tokens. Because really, you want to hold it from here and you want to be Jeff Bezos here, right? And he didn't lose control of his equity. You don't lose control of your tokens. So that's really vital. It's also, don't FOMO, because you'll find out you'll end up buying at peaks and selling at troughs. That's the emotional side of things. Also expect 30 to 40% pullbacks often and think of them as normal. And if you've got cash, that's when you buy more stuff. So it's like having this mentality. It's also be careful not to lose your tokens because you get hacked. So store them on a ledger system somewhere. You know, keep a cold wallet. Just simple things like that will stop you losing your tokens, stop you, well, even you FOMOing in fear, selling out, panicking, or bull market buying too much. If you don't do that, you'll lose control of your tokens. Again, just don't lose your tokens.
The basics.
And just hold it from here, and in 5 years' time, it'll be here, and in 10 years' time, it'll be here. And people don't believe that's possible, but this is the gift that keeps on giving it. It's the same with NASDAQ.
Yeah.
Right? Tomorrow will be more digital than today. It's a simple fact. So will tech stocks over time do well? And everyone goes, yeah, but they crashed in 2000.
Right.
Okay, well, we had a massive bubble in tech stocks then. You pay back for a year or two, but anything you bought into that crash was Amazon, Google, you know, Apple, all of these things did stunningly well. So people just have the fear of what's happened in the past. But we know this tech adoption curve is not going to stop. In fact, it's increasing. So the probability is, even if you have a bear market, which we had in 2022, it lasted 1 year, 9 months. 9 months, it bottomed out with liquidity, and it's been up ever since.
Yeah, it's the time invested.
That's right.
Time invested.
Time horizon is a really important thing.
Yeah, I always tell anyone that asks me about anything that's happening in the short term, just time invested is the number one determination of whether or not you're going to make money.
Yeah, and we were talking before about people want to be traders. They think the way to make money in financial markets is to trade all day. Yeah, it's great for your business because you make fees. It's great. It's terrible for them because I literally don't know of the world's great investors. Paul Tudor Jones is a pretty good short-term trader. Stevie Cohen's a pretty good short-term trader. Other than that,
Right.
the people who are good short-term traders built systems to do it.
Yeah.
Renaissance Capital, people like that. Most of the people actually led money from long-term structured bets.
Yeah.
Stan Druckenmiller, George Soros, all of these guys. They were not trading all day.
No. And leverage.
Day traders. I mean, there's virtually not a day trader I've ever met that's made money apart from unless you're a market maker in the floor of Chicago.
Right.
And that's a different job.
Yeah. That's also a different edge that you have going.
Yeah, and it wasn't that many people who made a lot of money doing that either. People who make good money, but the really good pit traders, very, very few.
Yeah.
Top 1%.
One thing of interest, as we're talking about this exponential age, the banana zone, don't mess it up. I think a lot about diversification. One of the things that you can do to help, just fight against the psychology of dealing with the volatility is having a good diversified portfolio. I'll just go to my personal side. One of my personal things that I'm constantly thinking about is this idea of what the blue chip of today is versus what the future Apple and Google is going to be on the digital side. I don't know if you get the analogy, but we have Bitcoin. Let's take Bitcoin out of it.
Yeah.
Right.
It's a different beast.
Yeah. If you just look at layer ones, layer twos, right, there is a challenge or a risk. It's a non-zero risk that the sweetheart of today is going to be, there's going to be some black swan that comes and all of a sudden we're like, wow, this is 20 years from now, this is what everything is running on, or has 30% of the market share and there's 4 or 5, whatever. How can investors, particularly the people that are trying to participate in this kind of period that we're talking about, what do you think the best approach is?
So I'm the wrong person to talk to about diversification because I've run large diversified portfolios, big hedge fund portfolios with many, many positions. And what I found is, since I kind of discovered that everything code thesis about liquidity being the dominant driver, I realized there's one macro driver that drives everything. And then on top of it is the adoption of technology, whether it's crypto or tech. Those are the two mega trends. Nothing else outperforms the debasement of currency, which is 8% a year plus 3% inflation. So 11% a year is what you need to do to break even on your savings. And so you've only got two assets to do it, technology and crypto. And when I divide the NASDAQ by Bitcoin, it's down 99.97% since 2012. On every time horizon, it's underperformed. But they're driven by the same factor. 97.5% of the price moves of the NASDAQ are explained by global liquidity and 90% of Bitcoin. Yet the performance is so wildly different. So I don't even know any tech stocks. Yes, I have trade recommendations for people who do, etc. I don't know those. So now you've got the world of crypto. So then if they're all being driven by the same thing, what you want to choose is the fastest horse. Now that's not buying the meme coin that can go up 100x. What you're trying to do is look for what are meaningful projects being run by meaningful people with meaningful communities. So it's this Metcalfe's law idea, how many active users do they have? What kind of value are they creating?
The utility, if you will.
Yeah, well, it's the measurement of the entire utility of the network. Do people value the network? Do they want to build on it? Do they want to transact on it? Do they want to own it? And so there's not that many that really show this. You've seen some of the communities like Cardano has a huge amount of retail users, almost no applications. Bitcoin has both at scale. Ethereum has both at scale. Solana is earlier in the network adoption model, but it's got it at scale. Sui, arguably, very early, looks like it might get it. So then I just, I played the dumb idiot. I kind of have a thesis in my head, and I'm just like, what does the chart look like?
Yeah, right.
And so you start with the chart of Bitcoin. That's your benchmark. Is the asset that you think is the greatest asset ever conceived, the one that you want to own, is it outperforming Bitcoin or not? 99% of all tokens don't. Okay, don't own them. But once you find the one that looks like it will, okay, now it's interesting. And that's what I had. That's why I switched from Bitcoin to Ethereum in the last cycle, then from Ethereum to Solana this cycle. Solana outperformed Bitcoin and outperformed Ethereum. And then halfway through the cycle, I realized the other horse in the race was going to be Sui, which was the ex-Facebook team built a blockchain, and I happened to be on the board of it, but it wasn't for that. It's because it was breaking out versus Solana, which was easily the strongest horse. I'm like, okay, this is the strongest horse squared. This is my bet.
Nice, interesting.
And so I'm pragmatic because, as you say, we don't know what will survive and what will do well. So I'm just pragmatically looking at kind of weekly chart time horizons.
Performance quite a bit. Yeah.
Is it breaking properly? You know, have I got something to capture in understanding how it's going to move going forwards? I'm not interested in day by day stuff. You know, is it structurally looking like it's going to outperform? If it is, I'm going to hyper concentrate because then I don't have to worry about anything else.
Yeah.
It's a weird thing. Even Stan Druckenmiller would say this, is like, you know what? Don't have many eggs in your basket because it's much easier to watch.
Well, and you know, there's a lot.
And that's not for everybody to do.
No, it's not. But it depends also, I think, on the asset class. Like if you look at diversification in tech, if you're on the equity side of things, it's probably easier to get a solid diversification strategy in play with technology stocks because there's just a lot more things there. In some ways, maybe this sounds weird. There's simpler.
And you've got the NASDAQ.
You've got the NASDAQ. You can buy the ETF.
Yeah.
And I think sometimes the challenge in crypto is that some of these projects and concepts are very difficult for people to understand unless you have a bit of finance, a bit of technology, a bit of, what does the guy say today, philosophy. Like it can be difficult sometimes to understand the utility, the tokenomics of particular projects. And I think sometimes that's intimidating for people. And to further to that, you know, we used to always say on the trading desk that people shouldn't trade what they don't know, right?
And if you can't explain it to me in one sentence, I'm not interested.
Yeah.
Right?
Yeah.
Because therefore, we live in a world of attention in everything that we do. And if I can't capture your attention on a blockchain technology or a new technology or a new product or a new anything, you know, everything is the game of marketing of attention.
Yeah.
And if somebody says, well, we've got this interesting protocol that does this and it's got these ZK things and blah, right, they've lost 99.9% of the people.
Yeah.
And so that is the important thing. You know, that's why Bitcoin digital gold, Ethereum's one was, and they kind of lost their way for a bit, was like the world computer, because it's basically a distributed compute platform. You know, Solana was basically fast and cheap.
Yeah, I was interesting. Yesterday I was watching the, you know, existential crisis of Ethereum panel, right? And it was, you know, you had different actors on the panel, but what do you make of the Ethereum versus Solana kind of debate? You know, that, you know, some people are saying that Ethereum has kind of pivoted their strategy and now they're going back to optimizing the layer one and not delegating so much to the L2s, and Solana's, you know, it's too late. Solana's out.
It's really simple to me. Microsoft and Apple exist. Android and Apple exist. Microsoft and Google exist. And they all have products that do the same thing, but they have different segments and different users. So if you are a non-corporate millennial, you'll use Google. Google Sheets, Gmail, all of that. If you're a corporate, worked in a corporate, you will 100% use Microsoft unless you're in the media industry. Every single bank, financial institution on earth uses Microsoft.
Yeah.
Why? Because you don't get fired for it.
Yeah.
They don't want that as a risk.
Yeah.
Apple is like, well, you know, this is the cool kids brand. This is more retail. This is, you know, it was a way of showing status, but it was, you know, it was great design. It did different things. So if you really simply put it, Solana may well be Apple, or you could put the Solana and Sui as these are the kind of apples. Is that going to replace Microsoft? No. Because if you work for a bank and you've been in the financial industry for a long time as well, there's no way you're going to say, hey, let's use this new chain that's been out for 2 years. You want the one that's been out for 10, been battle tested, has the most number of developers, the easiest integration. You can build a layer 2 because you don't want to use the layer 1 because you want to do something between bank A, bank B, or insurance company A, insurance company B. You build a layer 2. So what they've done is overbuilt Ethereum for current market. But we know where regulation's going now. We know that every financial institution on earth is going to build on this. We know that all assets are going to go onto this. So are the corporations likely to choose Ethereum or something on EVM? Yes. So my view is people are over worrying. They're mid-curving it.
Yeah.
You know, is Ethereum as an ecosystem faster and cheaper than it was? Yes. Is it perfect because, you know, does it accrue to the token holders of Ethereum? Maybe that's not right yet, unless those layer 2s get really massive. But that could happen too. You stick all of equities on a layer 2, you're going to generate all of the thing. So that's how I think about it right now. I think there's space for different types and different use cases, you know, and Bitcoin is entirely separate because almost all of the applications layer has failed on Bitcoin. Yes, there's some NFTs and there's some lightning transactions for payments, but really, you know, even when you come here, you know, all of the Adia and Adic and all of these guys, they're all like, it's a store of value.
Yeah. I thought I was watching the ETF panel yesterday on the guy from BlackRock and I think Van Eck and I forget the other gentleman who's from CME. The BlackRock guy was talking about something interesting, which was, you know, if Bitcoin, particularly for the rest of this year and in the near distant future, if it can maintain this negative correlation element to large cap indices, a variety of different assets, and it's not just seen as like a levered proxy to tech, right? That's when kind of all of these predictions of price really become, and that's the key thing to watch in the space. What's your opinion about that?
I don't think it's uncorrelated. I think they're all correlated. They're just in different phasing. So I think tech stocks and crypto are correlated. But because of the exponentiality of adoption effects, crypto just does this. So the gains compound much faster. So in a portfolio, in a diversified, broad pension portfolio, it actually is highly accretive because you need to have little of it to drive huge performance returns.
Okay.
Now, everything else is lagged because there's a domino effect of liquidity. It's tech and crypto. In fact, it's gold first, then tech and crypto, and then it's cyclical stocks, commodities, all of that. They're all lagged. So I think they are all correlated. I know people think there's an uncorrelated asset. It isn't. All assets are driven by liquidity. I just don't believe there is an uncorrelated asset.
Interesting. I'm going to go a little bit simpler. You know, we have a large pool of retail customers, a lot of new customers. We get a lot of questions from people. How should they start? What should they invest in? You know, people, and this is not a new phenomenon, people are always, you know, scared to pull the trigger on investments and making a bad decision. As it relates to, you know, crypto, blockchain, you know, all of this kind of exponential age elements, all of the different pieces. Like if someone wants to get started, what would you recommend to them? Maybe not necessarily specific assets or amounts and all that kind of stuff, but how you think it's too late?
No. It depends, what your time horizon is and what you're trying to get out of the investment. Right? If you're saying it's a 5-year time horizon, I'm saving for my future because I want to buy a house or whatever, you know, this region, everyone's very young. So, you know, what is your goal? So if you truly are longer term, then it doesn't matter when you start. What it matters is when there are bear markets that you add during the bear market.
Participate,
because you compound returns so much faster. Because if not, it goes up to a peak, it then comes down, it goes back up. That whole period can take time. But if you're adding here, your dollar costing average, you're lowering your entry price, and actually your returns compound. So that's one thing. The other thing is, okay, if your time horizon is shorter, generally speaking, the liquidity that we see in the system means you've probably got 12 months that you can make some good returns. And then, so, okay, how do I want to capture those returns? Because I'm a little bit scared, I don't know what I'm doing. I do a really simple thing, which is stick in something like 25% in Bitcoin and 75% in NASDAQ. Just something like 50-50, whatever and see what it feels like.
Yeah, right.
Right? For what it feels like when it goes down, what does it do to your emotional state? Can you handle it? Are you okay? Or are you relaxed? Don't look at your P&L every day. I mean, I don't look at my P&L. Occasionally when it's at all-time highs, the markets are, I'll then check my P&L. Because if not, you're calculating all the time. Oh, I was here and now I'm here, and oh my God, I've lost $2,000, and $2,000 is a lot of money to me.
Yeah.
Don't do that. So just keep it simple, stupid to start with. Everyone can make everything sound complicated in the investment world. And all we're saying is, hey, listen, tomorrow is probably likely to be more digital than today. So just get the tech exposure that makes sense, that captures that exponential age. Then start learning. Start listening to people on Real Vision. Start reading people on X. Start understanding how the world works. And eventually you'll start thinking, you know what? I might want to switch some of my NASDAQ into Tesla or whatever that opportunity you see, Rocket Labs or something, because you've suddenly found, you think, oh, this space thing is bigger than I thought. That's how you get to do it carefully. Whatever you do, don't just blindly follow somebody you see into something you know nothing about, because you will lose money. Every time I've done that in a meme coin, because I have a small portion of my portfolio which I'll allow myself to do stupid shit with. And every single time, without fail, since I've been in crypto, that I've taken a tip from somebody and said, like, this is the next big thing, it has gone to zero.
Yeah.
And I have a wallet of shame that proves it.
Right.
And so just don't do that. If you are going to do that, just do it with 10%, 5% of your portfolio to learn with. If you think you're going to be the world's greatest day trader, which I'm sure they are going to be, not, do it with 10%. Prove it to me that you'll outperform your buy and hold strategy over 6 months. Guarantee you won't.
Great advice. Great advice.
But just, prove it to you.
No, I hear you.
Do it. Don't do it with your whole portfolio. Just
try it. Yeah, try it before you buy it, right?
Exactly.
Quick on meme coins.
Yeah.
You a fan, place for them? Too much penny stockish kind of worry, pump and dump, or what do you think?
It's all of the above.
Yeah.
Right. It's a crazy wild west of scams, pump and dumps, ridiculousness, but it also is representative of what the internet is. It's memes, it's jokes, it's something that's hot one day and not the other. That's what it represents. It represents our attention and how fast or pervasive that attention can be. So some assets have managed to keep attention for a long time.
Yeah.
The US dollar being one of them. Well, no, it's true, right? Yeah. It's actually driven by memetics and attention. And do we have faith in it because we tell ourselves a story that we do, right? Why has Dogecoin been so persistent? Well, that meme seems to persist forever. Yeah. So much so there's a US government department named after it, right? Which is ridiculous, but that's attention. So that has value. So meme coins are about the attention of the internet, the joke that was here today, gone tomorrow, or something that is persistent through time. Now, if you can find one that's persistent through time, it's pretty rare. And for it to be tokenized and maintain value and maintain attention, pretty rare. So it's not easy to make money. Shorter term time horizons, maybe. Maybe you think fart coin's hilarious and it's going to capture attention. How long? It's not easy to do. So I don't really find it very investable. You can have some fun and lose some money, and maybe you hit one and it works, and okay, fine. But what it is doing is showing how fast you can essentially form capital around your idea. Hey, I've launched something called Fartboy, and suddenly it's worth $1 billion in a week. Okay, so you're creating something with $1 billion of value in a week. That used to be a tech unicorn.
Yeah. One of my biggest challenges is getting people to really understand the value of what they have access to with Real Vision. One of the reasons why we chose Real Vision was because of the quality, because of the no BS, ness, if you will, of it. The real investing course, for example, I made all my kids go through the real investing course before they started to interact with the markets, right? But it's a 9-hour commitment, if at minimum, right? So one of the things that I've noticed from our customer base, and a lot of this content we're going to distribute to them, is, the attention span is just not there. But it's such a vital and important part of having success investing and trading in the markets, is really knowing what you're doing, understanding certain base level of things, even when you're in the experimental phase and just getting started. If you could talk to our customer base and explain to them the value of the content they have.
I think it's the other way around. I'm going to tell you something that maybe you think about. We learned this. Is the demographic has changed. Young people are internet native and gaming native. They want to trade first and then figure it out later. And it's entire change. So my generation was, you educate yourself, you learn about it, you then test it, you give it a go. This generation is, I throw some money at that, see how it works. I lost money, made money, right? So they figure it out, much out of stage. Well, they're used to the game though. Yeah. Right, you get on the game, oh shit, I lost my life. Okay, let's do it again, right? So they don't have, they're a completely different construct of how it works. So lean into that. That's okay. Because then what happens, look at the size of these crypto or macro YouTube channels. A lot of people then, once they are in it, they want to start to learn. Why is that guy made money in that? Why did I miss that? Why is this guy talking about this? Could this be the thing that sorts out my trading messes? And then somebody gets one right, and then they start, I saw it with around a community in Rocket Maps, which was the best one I made because it was the only other publicly listed space company. But what it formed was a community. And on X every day, there's 2 or 3 people who'll be holding spaces. There's their video content being made. There's a documentary that comes on Netflix. And before you know it, if all of these young investors are down the rabbit hole of space exploration and how to think about it, Tesla did that in the past. GameStop have done it in the past. There were companies that Palantir is doing it now to a bunch of young investors. Nobody else understands Palantir. They turn it into a meme of which they understand it. And that's okay, because I think you don't have to do it the slow way. You'll get there anyway. Because in the end, the only way to succeed is with knowledge. But don't force people to have knowledge first. You have an endless desire for knowledge once you've either made some money or lost some money, and you will understand why. And it kind of happens.
So you think it's more about perhaps, working on how we can curate the content to get engagement in bite-sized kind of chunks?
I don't think they care about bite size.
Yeah.
They'll get bite size on Twitter, TikTok, or wherever or Instagram. They don't care about bite size. They love long form content, but only when it matters to them. So the question is what content suits what customer?
And when?
So, I mean, literally nobody in crypto gives a shit about 2 guys talking about oil and the commodity curve or volatility, or they don't care. Get me closer to the trade. So I'm in crypto, show me some guys who are investing in crypto. Half of them don't really care about the technical talk. It comes later when you're trying to figure out, hey, is this new thing something real? They want to hear people talk about where price is going, why it's going there, and then what might succeed. Then with that what might succeed rabbit hole, it goes down to, oh, well, those guys are talking about it more in depth over here in this other piece of content. Maybe I'll go down that. So the learning journey is actually different. As opposed to learning the fundamentals of investing, they tend to learn the fundamentals of what Bitcoin is. Like a lot of people start with Bitcoin Maximus. This is the only thing possible. Then you learn about smart contract technology and what you could do. So it's thinking about that in how people want to learn. But if you're in crypto, like Rivers, there's plenty of really amazing, straight up crypto content of people who are in the markets and care. After a while, when you want to know more about the technology, because you're now in it, we've got the content for that to give you the depth. And then you'll want to understand, oh, it's all driven by the macros. So these bond guys are actually talking about something useful, or the dollar guys, and you'll realize that over time, it's all part of the same space. It took a long time for macro people to believe that crypto was part of their universe. I mean, I got a lot of hatred for that, and I've been driving the space since 2013. And the crypto people didn't believe the macro was relevant. Now they're all starting to see it, but we all have to become technologists as well. So there's all just different parts, and we need to learn technical analysis, because price seems to be a great way of judging how good these protocols are over time and stuff like that. So yeah, I think when you're ready, if you're a user of Amana, you've got into the market, you're starting to figure stuff out, then look at where did you go wrong, and then say, oh, there's that real investing course.
Right.
I can figure about risk or stop losses or leverage or how to use options or all of that stuff. And then just choose the module you care about. Don't choose to do the whole course.
Yeah.
Nobody wants to go back to school.
Yeah.
They don't.
Yeah. I can see that.
But short form content, there's endless creation of short form content, which is why every single brokerage platform who's tried to create content has failed.
Yeah, well,
Because they all think, it's like friends on IG, well, we don't want the long form content. What we actually want is short form. Yeah. Every single brokerage firm has failed.
yeah.
TD, the whole lot. Robinhood, the lot. It's because nobody goes to their platform for the content.
Right.
They go there to trade. They go to elsewhere for that short form content.
And I think
If it's long form, they go to YouTube or they go to Real Vision or whatever it is.
Raoul, I appreciate it. The time. I've got one last question. It's a market timing question, which you'll probably hate, but
Those are not price prediction.
no, it's not that detail. End of year.
Yeah.
And there was a similar conversation earlier in the week. End of year, crypto assets, equity assets, rates. Where do you see them?
Yeah. And I was the outlier on that panel.
I was with you though, so I just don't want to be the one.
Like crypto a lot higher. A few multiples from here. More than 100%. 2, 3, whatever. Equities higher. Significantly higher. I think we'll have forgotten all about this tariff noise and all about the hand wringing over recessions. It'll all be in the rearview mirror pretty soon. Or the sun will have forgotten about it. To higher. And I think because of the slow patch, it's going to accelerate the downside of inflation. I think inflation is going to fall. Growth is not going to pick up yet. It will pick up. And I think unemployment is going to be sticky because of AI. It's not going to, unemployment rates are not going to plummet as the economy grows. So I think over time, rates are coming lower as well. So it's like, for me, it's...
Raoul, thank you very much. It's been a pleasure. I appreciate it.
Well,
and looking forward to doing this again sometime.
Absolutely.
Yeah.
Thank you.
Thank you.